France's debt crisis isn't coming, it's already here. While headlines still talk about Italy or Greece, the real fault line runs straight through Paris, and it's spreading across Europe, and very fast. We are watching, in real time, one of the largest economies in the world slide into a debt spiral that could shake the entire Eurozone and with it global markets. What we are watching isn't just a fiscal problem, it's a slow motion collapse of Europe's economic foundation, and that's about to hit ordinary people like you and me more than we all realize. Before we dive in, I just wanted to thank you for all your amazing feedback. The response to my last video was insane, truly amazing. Your support, your comments, your engagement, it truly means a lot. I appreciate it, many things, but it also means another thing, that you all know and feel what's coming. And the deeper I dig into the data and I connect more dots, I have to admit, I'm worried. Because the more I study what's happening, the more it all makes sense in a way that's deeply unsettling. It all comes down to one thing: broken money. Since 2020, we can all feel it. Something's different, something's changing. The world is moving at a faster pace. Prices rise, savings shrink, and it doesn't matter how hard we work, everything just keeps costing more and more and more. That's not an accident, it's the system itself. And France's debt spiral shows exactly how that broken system looks when it finally begins to crack down. France's government has been spending like there's no tomorrow. While most countries started cutting deficits after the pandemic, France just kept going, -5% to -6% deficits year after year. This isn't a temporary crisis, it's a new normal. Everywhere in the world, but especially in France. The debt keeps growing, but the economy isn't. Inflation is eating people's wages, and interest rates are climbing, capital market interest rates, meaning the government pays more just to keep the system alive. The deeper the deficit, the weaker the euro, and the smaller your purchasing power. This holds true for any currency, by the way. So let's look at the state level. In the 1950s, debt of France was 15% to GDP. Today, over 110%, climbing towards 120%. The so-called point of no return. Economists call this the irreversibility zone. Once you cross it, the debt feeds on itself. You cannot outgrow your debt anymore with natural growth. So France doesn't manage its debt anymore. The debt manages France, and with that all the political actions and decisions. Every budget is a negotiation with mathematics, and mathematics always wins. Politicians need to understand that. So the spending has gone wild. Over 55% of France's entire economy is now public spending. 1/3 goes to social protection and pensions. And now interests are bigger than the educational budget. Think about that. France spends more money on old debt than on the next generation, on our children, on their children. This is what it effectively means. And it's accelerating. Every major cost category is rising. The trajectory isn't cyclical anymore. It's structural, and it's progressing. The markets start noticing all this. Credit agencies are downgrading France at a fast pace. Investors are demanding higher yields, higher risk rewards. The spread between French and German bonds keep widening. When investors lose faith in France, they don't just sell France, they lose Europe. They sell Europe, because the Eurozone is a transfer system, and France knows that, of course. One country borrows, another one absorbs the risk. This is the price of the Eurozone, the transfer system. Every time France overspends, or Paris overspends, the pressure shifts to Berlin, Rome, Madrid, and so on, and ultimately at the European Central Bank. This brings me to Germany's breaking point, the bottleneck of Europe. Germany used to be the anchor. Strong industry, strong economy, solid budget, fiscal discipline. But now even Germany is in a recession, stagnating at best. Production, manufacturing, shrinking. Energy costs among the highest in the world, sky high, are crushing margins. And fiscal gaps are widening as well. So a simple question is, What happens when both the spender and the saver are in trouble? Who saves Europe then? The answer is simple and obvious. No one can. Either Berlin pays or the ECB prints. If Berlin pays, political stability collapses. If the ECB prints, monetary credibility collapses. Either way, Europe loses or is losing already. From my point of view, and my perspective, the collapse of the current European structure isn't about if, but when and how fast. Whether that means political fracture or monetary reset, the outcome is already baked in. So this brings things all down to the perfect storm. Because just when Europe could least afford it, war is back on the table. You heard me right, I'm talking about war. War justifies spending. It fuels debt, it fuels inflation. It gives government an excuse to print more and therefore control more. And that's exactly why the ECB is rushing now to roll out the digital euro. In a system drowning in debt, digital money gives central banks the ultimate tool, control. Imagine programmable money. Every euro traceable, every transaction recorded, every stimulus targeted directly into your bank accounts. Sounds really good and efficient, right? But it's also the perfect mechanism to control behavior. Who spends where, what, how, on what. All adjustable in real time. So once that system is alive, be aware and be understanding, freedom becomes conditional. It's no longer your money. It is their permission. You will need to ask. So what we are basically seeing is a slow motion collapse of Europe and the Eurozone. Friends, that spiral isn't just about numbers. It's a warning about where Europe is heading. And as I said it before, we are all feeling it. Something's in the air, we can literally all feel it. Inflation destroys your purchasing power. Debt destroys your future. And digital control destroys your autonomy. Be aware of these three things. This isn't a financial crisis. It's a systemic shift. Europe isn't running out of liquidity. Europe is running out of credibility. And we see that also in many political patterns. The next crisis won't come from the periphery. It will explode from the center, right here at the heart of Europe. And it won't just be an economic one, it will be personal. Because when money dies, freedom dies with it. I know this wasn't a rosy outlook, but I promise to keep it real. No hype, no filters, no BS, just reality. If you want to go deeper into what this means for currencies, bonds, investments per se, you'll find my full analysis and data on my Substack, Macro and Markets by Chris Consultant. You will find the link below. Also, please subscribe here on Twitter, wherever you can find me, hit the bell button and stay informed. Because Europe's slow motion collapse has already begun. Don't just watch it, understand it and act proactively.